I'm Rose Jacobs here with you for Kalkine. Today we're going to look at what is Master Limited Partnership. But first, make sure you press the bell icon for all the latest updates. A Master Limited Partnership, or MLP, is a type of publicly traded corporate venture that combines the characteristics of a firm with those of a partnership and exists as a publicly traded limited partnership. Such businesses are not subject to corporate income tax. It combines the tax advantages of a private partnership with the liquidity of a publicly traded corporation. A Master Limited Partnership can also trade on national exchanges. Because MLPs are mandated to release all available cash to investors, they maximise cash flow benefits. They may also assist in the reduction of capital costs in capital-intensive industries like the energy sector. The MLP is a distinctive hybrid legal entity that combines two business structures, a corporation and a partnership. It is first treated as a collection of its partners rather than a separate legal organisation. Second, it is technically devoid of personnel. The general partners will offer all necessary business services and usually hold a 2% share in the venture and can boost their ownership. An MLP, like a partnership, issues units rather than stocks. These units are nonetheless regularly traded on national stock exchanges. Traditional partnerships will not be able to supply this level of liquidity due to the lack of liquidity offered by exchanges. As these publicly traded units are not stock shares, investors in MLPs are commonly referred to as unit holders instead of shareholders. Limited partners are individuals who invest in a master limited partnership. The deductions, revenue, credits and losses of the MLP have been allocated to these unit holders. MLPs have two types of partners: limited partners. Silent partners are another term for limited partners. They are investors who buy MLP stock and contribute capital to the entity's operations. They've been getting distributions regularly from the MLP, usually every quarter, and general partners. The owners in charge of the MLP's day-to-day activities are these general partners. They were paid a salary based on the partnership's financial performance. So what are the characteristics of a master limited partnership? An MLP is not treated as a separate legal body like a firm, but rather as a collection of present partners. In every such corporate enterprise, there are two kinds of partners: limited partners and general partners. The general partners have overseen the firm's day-to-day activities. Limited partners, often referred to as the unit holders, are the individuals who have invested in business operations. And limited partners get cash distributions that are considered capital returns. General partners are compensated based on the firm's overall business performance. So what benefits do Master Limited Partnerships offer? MLPs are renowned for their slow investment opportunities. MLPs are frequently in slow-growing industrial sectors like pipeline building, which explains the low profits. However, MLPs are low risk because of their moderate and steady expansion. In addition, long-term service contracts offer them a steady source of revenue. As a result, MLPs generate consistent cash distributions and reliable cash flows. MLP cash payouts often grow at a slightly quicker rate than inflation. Typically 80 to 90% of distributions are tax-deferred for limited partners. As a result, MLPs could offer appealing income yields that are much greater than the average dividend yield of stocks. Furthermore, as a flow-through company, more capital is available for future developments. The availability of finance aids the MLP firm's capacity to compete in its industry. What are some of the drawbacks of MLPs? Master Limited Partnerships have a poor return on investment since they are in a slow-growing industry, like exploration. The investors will be given the corporate tax liability that might hurt their return. If the limited partners possess units in many states where the partnership does business, the entire tax filing process could become complex. And because institutional investors bear tax charges when making investments in units, master limited partnerships have a small pool of investors. And that's it for today. If you like what you've learned, then don't forget to like, share and subscribe, and go to kalkinemedia.com for all of our latest videos. I'm Rose Jacobs, and I'll see you next time.